the PPE acquisition or the investment in the fixed assets is also related to the capital budgeting. Whether the company to invest in these assets or not is a decision making by the managers. So the managers should forecast all the possible future cash flow generated from these invested assets, either PPE or intangible assets. And the investment decision is based on the comparison between the present value of future net cash flow from this investment and the initial acquisition cost. And this decision is based on the NPV IRR. You should learn from the corporate finance. Regarding the capital budgeting, the company should invest in the NPV that are greater than 0 and IRR that is greater than the hurdle rate or the cost of capital, required rate of return. But this is just the screening of the different investment objectives or options. Similar to the prior chapter, we are going to learn another turnover ratio. It is fixed assets turnover ratio. Similar to the prior turnover ratio definition, it is the net sales during an accounting period scaled by the average fixed assets or average assets. So here it is a fixed assets turnover ratio, so the denominator is the average fixed assets. We are given the current year and prior year balance of PPE for these two companies and their sales. We can see the sales of two companies are very similar, very close to each other. But regarding the PPE, Gap has greater balance of PPE than Ross Stores. That also indicates Gap is more capital intensive. Then we calculate the fixed assets turnover. We find Ross Stores has greater turnover ratio than Gap. Ross Store is more efficient in utilizing its assets, especially fixed assets. So $6.26 means every $1 investment in property, plant, equipment, Ross Store can generate $6.26 sales from these investments during 2022, while Gap only generates $5.43. One more example, we're given all the information to calculate fixed assets turnover. You can calculate by yourself. Remember, use the average PPE to scale current year sales revenue. And finally, the answer is A.